Hey everybody, welcome to this month's edition of The Pitch, the May 17th version. May 17th, also the 230th birthday of the New York Stock Exchange. So as a 30-year veteran from down there, I'm very honored to be hosting on the exchange's birthday. We have with us three amazing panelists that are going to pitch to you, the audience, 5 great ideas. I can't wait to get started. But before we get started and introduce everybody, let's just go over some ground rules. Each of our guests are going to pitch to you, the audience, 5 of the stocks that they're watching now, 5 ideas that they think could be actionable and, serve you well, the viewers. So before we get to everyone's ideas, let's introduce the panelists. Our first panelist is the great Erin Swenlin, former host of The Pitch. And I hope I can do you proud by taking this role. But thanks for joining us. Erin is the co-founder and vice president of Decision Point. And thank you for joining us, Erin.
Thank you. And I'm sure you're going to do just fine.
All right. Well, we'll see. You can always correct me. Don't feel like you're stepping on my toes at any point. And speaking of former hosts, I have been on the other side of this host discussion on this actual show. It's Grayson Roze. He comes from us as the VP of Operations at StockCharts.com. So it's a home game for you being on StockCharts TV. But Grayson, this is going to be a lot of fun. I'm excited to hear your picks.
Always, yeah. Thank you for being here, Jay.
All right. And then last, but certainly not least, speaking of the New York Stock Exchange and its birthday, one of my former colleagues for years down on the floor, who has now moved on to a new role as Managing Director and Global Head of Tech Strategy at Fundstrat, is the great Mark Newton, CMT. Mark, welcome to The Pitch. I know we've done this together, but now I get to ask you the question, so it's kind of nice.
Yeah, thank you, sir. Look, Jay, it's great to be back. And yes, happy birthday to the NYSE. I am the only panelist which has the dubious distinction of not having hosted, but don't let that count against me too much. Right? So,
trust me,
look forward to joining everybody.
The people at StockCharts will be getting you. And if I may be so bold,
I'm keeping that in mind.
Yes, right. It is an honor to be hosting, filling the shoes of not only Erin and Grayson, but the great Dave Keller. Hey, let's not waste any time. We've got some great charts to look at. Erin, ladies first. So you're going to be up first. And the first chart you chose is AbbVie. So why don't you go right at it and explain the pitch?
All right. So I'm all about the technicals, very, not generally a storyteller as far as what a stock is doing. I'm just looking at what's in the chart. It's all baked in my opinion. So with that, I did pick a biotech, AbbVie. And the reason I did, there were a couple of great things going on with this chart. But let's start with price. Price is broken out above some short-term resistance in not only those lows from April, but also above those key moving averages, the 520 and 50-day EMA. So that right off the bat made me think about this chart. I also got this chart from one of my exclusive Decision Point scans that I do to run my DP diamonds on my website. So this is right out of that scan. So hopefully this is going to do what it's supposed to. RSI is just now positive. My price momentum oscillator, very similar to the MACD and the PPO, but it's a decision point indicator. We're seeing a bottom on the PMO. It's just about ready to get back above the 0 line and looks like it might give us a crossover buy signal really, really soon. Volume is doing just fine. OBV is pretty flat, but that's actually a good thing when you see price in such a decline right now. And that breakout too from that declining trend. So that's excellent. And stochastics, they're almost above 80 there. They're rising nicely. And we want to see stochastics above 80. We want to see it oscillating above 80 because you can see exactly what happened between February and March where the stochastics were oscillating above 80. So that's kind of what I'm looking for. I think that this looks good. Healthcare, I think, is going to see its day in the sun. Usually a defensive sector, so I'm kind of surprised it hasn't done better than it has. But I think that this one's going to do very well.
Excellent. And I think we may see some other healthcare names along the way. So our second panelist, our second choice, we're going to throw it over to Grayson Roze. Grayson, you have with you a commodity index, the DBC Invesco DB Commodity Index Tracking Fund. So let's take a look at what you chose.
That is true. So I admit it, this is a little bit different for me. I am a full stock junkie. I mean, as you're going to see, the next couple of picks from me are all going to be individual names. But I love what I'm seeing on this ETF, on this commodity tracking ETF. And so I wanted to start with that. Keeping it as simple as possible. Stocks are incredibly weak right now. We know that. On the other hand, commodities have been incredibly strong. That is a bit of a flipped script, right? In the last couple of years, really almost the last decade, we've seen a lot of weakness out of commodities and we've seen a lot of strength out of stocks. So I'm just kind of leaning into that right now. And of course, I mean, looking at this purely from a technical standpoint, this ascending triangle that we're seeing on DBC right now is just a thing of beauty. So we've retested, or we are currently retesting this same level, kind of around that the high 28s here in DBC for the fourth time this year. If we can break above that kind of 28, 29 level on DBC, I think this thing continues to run to the upside. Really kind of a picture perfect ascending triangle that we've got here forming on this. So I actually like to look generally at about a 1.5 year time frame on my charts. In this case, I've actually zoomed this in. I think we're only looking at about 6 months here because I really wanted to highlight this ascending triangle. But just purely a technical play here on DBC, a strong group. If we can see it break above that clear resistance there around kind of 28, 29. I think this thing continues to run to the upside. And, thinking, longer term about kind of changing tides, if we see this strength in commodities continue, it's really kind of a big reversal of what we've seen for the last decade or so. So I kind of like that tailwind as well. So that's what I'm seeing here on DBC, a nice little trade setup there.
Yeah, it is a great setup, and commodities is going to be a theme. So I think you're starting us off on the right foot. And now Mark Newton, you're going to start us off with an individual name. Now we have to go back to, I'm trying to pull up Mark's chart. Here we go. Oh, Mark Newton, I'm going to set this up for you because you went back 30 years for Merck. And to me, I love different time frames. Grayson, he's using year charts. And let me just set you up, Mark. And here we go. All right. So Mark Newton, you are bringing us a great idea. Also in the healthcare space, you're looking at Merck. Mark, you're looking at Merck, Mark, going back 30 years. What got your eye onto Merck?
Well, thanks, Jay. I always like to pick stocks that are similar to my name. I think those have the greatest chance of success. Yeah, look, the majority of stocks in the pharma sector continue to be in my opinion, some of the best out there from a risk reward standpoint on a long-term basis. Many of these are breaking out of 15 to 20 month basis. And before I was on the pitch, we talked about Pfizer, we talked about Bristol Myers. Merck is the latest example of a stock that's breaking out of really a longer term base. In this example, we see this going back to 2000. And your results on the chart will differ whether you're looking, I believe, at arithmetic versus logarithmic charts. And so this one, of course, made its move back in mid-18, 19 and making the big breakout. What really interests me now is the fact that we've consolidated really just since 2020 over the last couple of years and now are starting to push higher yet again. So, I feel that this area is very attractive. I like Merck. I think it's going to continue to make upward progress. It doesn't really show me any evidence that it's extraordinarily overbought. I know that sometimes a consolidation will cause momentum to lessen a bit, but I still view this as being a leader within its peer group, and I like this quite a bit.
Yeah, without a doubt, it's been on a tremendous run, and if you put it into perspective, going back so many years, it's just powerful to watch. All right, so our first picks are out of the way. The second round, we're going to go back to you, Erin, and we're going to talk about some energy names here. In this case, it's the Invesco DB Oil Fund. Tell us what you like there.
Indeed. So I think, Grayson, you and I went very similar there, but I really love the energy space. Obviously, oil has been doing very well. And I really like this particular setup here on the oil fund DBO. We have, just like we were talking about, Grayson, an ascending triangle. They're bullish. You're supposed to expect a breakout to the upside. We're not getting it quite today. But looking at those indicators, I think we're in pretty good shape here. It's always nice to have those stocks or ETFs that are making new highs, or, in a bear market, we really want to see that 50-day EMA sitting above the 200-day EMA, because that tells you that in the long term, it's still in a bull market for that particular stock or ETF. That's exactly what we see here. My PMO has actually given me the crossover today, so that looks really good. And then you can see stochastics have popped up above 80, which, like I said, is kind of the magic number to me. Once you get above 80, things are looking good, and we're just about there. Now we just want it to start oscillating there. But I would look for a breakout. I don't see energy prices moving lower with the way things are set up globally, inflation, et cetera. I think these commodities and oil funds are going to do pretty well, just given that environment. And like I said, I think everything's pretty much baked into the chart. And if so, this chart looks great.
Yeah, it sure does. And it does look a lot like Grayson's first pick. So I like that you're both thinking. And now, speaking of Grayson, let us go back to Grayson's second pick. And we're going to stay in that energy sector, Grayson. I think, most technicians, they love the energy sector and strong charts. And you brought with you Phillips 66. So why don't you talk about that?
So we're sort of getting back to what I typically like to look at here. We're looking at 18 months of a time period here, and an individual name that I'm watching in that energy space. Like Erin said, I mean, a ton of strength coming out of energy. That is no secret. That's something, Jay, like you said, a lot of us technicians are watching at the moment. So my mission is just to follow strength, to move to where the market is telling me to move. And right now, the market says if you're going to be anywhere, if you're not going to be in cash, you should be in spaces like commodities, spaces like energy specifically. So as far as individual names go, I love what I'm seeing here from Phillips 66. We've had a lot of consolidation. This is actually one that's kind of lagged behind the energy sector a little bit, but is now starting to really get a pickup. So we're seeing this clear breakout above kind of that 92 level here on Phillips. The moving averages are set up beautifully. We've got everything kind of lined up the way we want it. The 20 above the 50, above the 200, above the above the 100. So everything here is just beautiful on this chart to me from a breakout perspective, and it's sort of backed by a breakout on relative strength as well. So in that top panel, what we're looking at is this specific stock. We're going to see this repeated across all my charts today. This specific name versus the total market. And what we can see here is that Phillips is just very clearly outperforming the total market. That is clear relative strength. It does get lessened a little bit because we have a weak market. So, pretty much anything that's not going down is going to be outperforming the market at this point. But I still like to see that relative strength coming out of PSX and specifically, a beautiful breakout within a strong sector. What's not to love? So
exactly.
That's my pick here for PSX.
And I like how you phrase that. From a risk reward setup, it looks fantastic. Now we're going to switch to Mark. And Mark, I wish Dave Keller was here for this choice. You have gone and selected utility, which to Dave, he'd probably want to hug you. Why don't you tell us what you chose and why you chose it?
Sure, Jay. So Xcel Energy is one within the XLU that really is within the shortest distance from its 52-week highs. It's performed very well. It's up about 11% thus far year to date. I always like to find these bases after extended run-ups, and we see that here with Xcel, where we ran up from levels in the mid-30s up to near 70. We almost exactly doubled, which is almost always an important area of resistance. We've gone sideways for 2 years, and now we've just started to emerge again back to new all-time highs just in the last couple months. So to me, that's very appealing to really emerge after a base of almost 2 years back to new all-time high territory. This one, of course, is they're involved with transmission and distribution of natural gas, and natural gas continuing to act very, very well, specifically given the Russian-Ukraine war. And so this is something where, my view is this is going to continue to outperform, particularly if we see rates start to back down a little bit, and we might see, further outperformance out of some of the utilities. So I like this. I expect it to get to the low to mid 80s, and it's certainly a long for me technically.
Yeah, and I like how you went on the weekly time frame to really show you, that utilities aren't usually sexy stocks, but this is a strong uptrend and it's breaking out. So I love this pick. The next pick is going to be interesting. We go back to Erin. We're staying in the energy space, but we're going with the best performing stock in the S&P 500 this year, Warren Buffett's favorite, Occidental Petroleum. So why don't you tell us why you picked Oxy?
All right. Well, I just want to give a shout out to JC Parrots because we were on the StockCharts draft show, and this was one of his picks. Of course, he cheated, and Dave Keller let him cheat because this is not an S&P 100 stock. But I'm going to take it anyway because I had to pick ExxonMobil, and I didn't like it as much, but I had to follow the rules because I follow the rules. But anyway,
Okay.
So anyhow, it's pretty obvious. I mean, on this daily chart, it's been consolidating like oil has been, which is why I really love all of those ETFs and stocks that are in that sector of energy, but particularly in those oil related industry groups, because it's been in this consolidation phase. And now we're finally seeing that breakout again. And I think this is that opportunity to get back in. Oxy, like you said, one of the best out there for it. Warren Buffett, yeah, okay, he picked it. But anyway, I love the breakout. RSI is positive. It's not overbought. So that's a good thing. PMO, we got a little bit of a fake out earlier on that first rally, but we didn't get the breakout and we didn't get the crossover. This time we have the breakout and the crossover. So I think that looks like a great setup. And of course, you can see OBV making new highs along with price. So that's what you want to see. And again, stochastics getting above 80. Now we want to see the stochastics stay there. But given the strength of this chart, and of course, the strength of the company, I think that, how can you go wrong here with Occidental?
Yeah, it's a phenomenal chart. And you did make reference to another show on StockCharts TV where Grayson, myself, you, JC Peretz, and 4 other people got to, what was it, the StockCharts draft. And we picked 2 picks. And Oxy was a big pick. And no, it's not in the S&P 100. I also cheated, but the commissioner did allow it to go through. But let's not
never prosper.
Yeah, well, you think they may because you picked Oxy.
We'll
But
see.
All right. Well, Grayson, we got to go to you, and I want to just pick up the pace a little bit. My fault, of course, because I want to get into discussion mode. But you went with a great one here, Olin Corp. Not many people know Olin Corp. It's in the materials sector. Why don't you just discuss why you picked OLN?
A bit of a similar kind of setup, similar concepts to what we were talking about with PSX there. I mean, we're seeing a beautiful breakout here. The moving averages are set up exactly the way that we want them. We've got the 20 above the 50, above the 100, above the 200. Those are the ones that I use on this chart. And we're seeing the same thing. We're seeing a stock that's outperforming the market very clearly. So a beautiful breakout technically and outperformance coming out of this name. That's exactly what I want to see in a setup. It's also complemented, though, by a ton of strength out of this group. I mean, really, this year, we've seen a lot of strength coming out of specifically chemicals names, not just material stocks, but specifically chemicals names. Stocks like Mosaic, stocks like Univar, there have been a ton of these things that have been absolutely flying this year. So Olin is kind of, just another beautiful setup within that space. When I see a lot of those kind of brothers and sisters within a group all moving together, that's a clear sign to me. It's not just one stock kind of levitating on its own. So that is my pitch here for OLN.
That's fantastic, and it's a great setup. Now, Mark, you and one of our other panelists like wheat. What are you seeing in wheat, the commodity itself? And we're going back, 12, 15 years on this chart. So why don't you tell us the setup you like?
Yeah, thanks, Jay. I always try to select the longest time frame possible just to really put the price action into perspective and then narrow it down. And, wheat has been phenomenal this year, owing its success largely to what's happened with Russia, Ukraine. It's up about 65% on the year, and I believe about 16% just in the last month. But you look at the right-hand side of this chart as we've been escalating, we're now set to make really a new all-time high monthly close. And still, if you were to narrow it down on a very short-term basis, the action just in the last few days is very compelling because it broke out, it consolidated, and now we're starting to turn back higher. So I think this makes for an excellent case for me that wheat gets up over $15 a bushel. I think that it's really still a great place to be. I know commodities have had a big run and some slow evidence of some of them starting to stall, but I think the grains in particular, typically tend to have a very good spring ahead of what usually is sort of a June swoon. And this year could be very difficult different given the supply demand. So I still like buying and holding these ags. I think Grayson mentioned Mosaic and some of the ag chemical companies that have prospered as a result. But I prefer however you can play it, be it through futures or options or just ETFs. That the ags still look to be pretty compelling to me technically.
Yeah, without a doubt, without a doubt. Now we're going to switch back to a healthcare stock. Erin, your fourth pick, PRGO, Perrigo. What are you seeing here?
All right. So I told you earlier I don't usually have a story to tell about my stocks, but this particular one I do, and I see some smiles out there. Yeah. We know about the baby formula shortage, and Perrigo is one of the ones. I believe they do a generic, but they are really seeing some great movement because scarcity makes price go up, and there you are. So this one, I think, looks pretty good. I'm just a little concerned about that overhead resistance that's coming with the 200-day EMA and, of course, those February, March highs. So that is coming up. But based on that strong momentum on my PMO, on the RSI being positive and rising, I think it still looks good. I'm waiting for this breakout. I think we're going to see it. And I did want to mention, you'll see those little pink lines and percentages on the right-hand side. I always put a stop on my charts. If I'm going to present a stock, I need to cover my butt and yours. So I will always put a stop level on there. It's just kind of my own, eye test of what I think that the best support level is. And obviously my subscribers can go either way. But anyway, that's why that's there. Stochastics above 80. You can see that ABBV just shooting upward with high volume. I mean, these are all the things we look for in a chart. The only thing that I don't have that I really wish I did is the breakout.
Yeah. And risk management's the most important part. So I like that you mentioned the stops just in case this doesn't break the way. We're hoping it does for you. Now, Grayson, your fourth pick, we're going industrials. Applied Industrial Technologies. What do you see here?
It's right there in the name. And again, this is just a really beautiful setup, breaking out to almost to new highs here. We actually had a breakout a couple of weeks ago, took a bit of a pullback there to the 50-day, but we're seeing us get here in AIT back up to above that breakout level. So this is one that came across my scan list, came across my watch list. And again, we're seeing a stock that's outperforming the market, moving averages set up nicely, and just breaking out of this consolidation range. A bit of an ascending triangle here. You could kind of make that argument, but mostly it's been chopping around within this range clearly, and we're starting to get above that. So I like that. One other thing that's a factor for me here a little bit is that industrials. If we actually look at industrials as a sector, they've been steadily outperforming the S&P 500 since really April. Now, that doesn't mean that industrials have been going up. It's still been going down, but it's been going down less than the S&P 500. So in times of weakness like this, I do like to keep an eye on that. What's going down the least? What's getting hit the least? And industrials actually is one of those sectors that's kind of getting hit the least relative to some of the others in the group. So a nice setup in here within a sector that might come back and get a little bit of love if we can put in a bottom here and bounce on the market. So that is my pitch there for AIT.
Yeah, in a market like this, down the least are some of your big winners, unfortunately. And Here's one that's not down the least. Mark Newton, I want to hear your thoughts. I like that you're taking a shot on something that's been beaten down. We're going to look at the TLT, and we're going to look at it on a longer-term basis. What are you seeing over the last 5 years, and what has your interest?
Yeah, thanks, Jay. So this is very much a counter trend play, and it's important to emphasize that the majority of my picks are, do tend to be trend following. This one, we see prices right down near lows that were made back in 2018. I picked this for a combination of reasons that largely are, non-traditional from traditional technical indicators, but things like sentiment. We saw the recent BOA survey from the PMs that largely being short treasuries was one of their high conviction trades. And so obviously, my thinking is that, it's almost right when the consensus gets too far to one side of the boat that we actually go the other way. From a counter trend perspective, there are some, DeMark signs of exhaustion based on some of the indicators that he developed. And finally, some of my cycles suggest that, rates are likely to roll over into the month of June. So I do think this is a shorter term type play. I recognize that the trends are still very strong on the downside with regards to price, higher in yield, but I think over the next 4 to 6 weeks, playing for a move lower in rates makes a lot of sense given some of the tools that I use.
Yeah, exactly. That's interesting. Very interesting. And then speaking of interesting, we're down to our last picks, and we're going to go a little faster on these because something historic has happened with these last picks. We have two panelists that picked the same exact stock, but look at it at different time frames. And we went back to wheat again. We went to a wheat ETF instead of the commodity. And that's where you've come in, Erin. Your last pick was WEAT, the wheat ETF. You're seeing things that Mark saw. Why don't you explain it?
Right. It looks great on that long-term chart, Mark. I think it's awesome. This is a way to play the wheat angle, if you will. We've got that beautiful breakout that came out of that consolidation phase. Basically, wheat went up in a parabolic fashion, broke down like parabolas always do, very quickly, very painfully. And then it spent its time pretty much consolidating. And now we've got the breakout, PMOs on a crossover. The RSI is a little on the overbought side, which I don't like, but stochastics above 80. And then look at that volume that has come in again on wheat. So I think that this is a pretty good pick, and I feel good that Mark picked it too.
All right. Well, that's excellent. And it doesn't stop there. Grayson, you went with an individual name in the staples, one that I like very, very much. Thank you to General Mills. Why don't you explain what you're seeing on the shorter term basis? And then Mark is going to re-emphasize why you like this stock on a longer term basis. Go ahead.
Yeah. This is going to be an interesting one. Again, similar to what I was kind of saying with some of these chemical stocks, this is a space where we've seen a lot of strength. We've seen a lot of names in the food products industry group really strengthening, really outperforming, breaking out to new highs. It's just a thing of beauty there for the food products group. So General Mills, GIS is another one in that space that technically looks really strong to me. We can see in that top panel clearly outperforming the market. Again, anything that's not going down is going to be doing that these days, but it's still nice to see that outperformance. It tells us, kind of where investors are wanting to place their money. So on the pure price action too, we've seen a stock that has chopped around in a range, broke out, came back down to test that, but broke out again on the run higher, and then has kind of retested that secondary breakout as well. So we're kind of trying to make a third breakout, if you will, on this chart. That's why we've got those three horizontal lines going across. Crazy candle today, but also a thing of strength there. We can see us, getting really hammered there on GIS kind of early in the trading session, but rallying all the way back and now relatively flat on the day. So that's really nice to see up near the breakout level. So if we can get above that kind of 73, 74 level here on GIS, I think this thing continues to run higher. And again, complemented by strength coming out of the food products industry group and consumer staples overall.
Exactly. And Mark, you love General Mills as well, but you chose a bigger time frame. And I love looking at charts on multiple time frames. It really puts into perspective the move that we're going through right now. What are you seeing in General Mills?
Yeah, I love to be on the same side as Grayson and on with Aaron on some of these picks. But yeah, but General Mills, of course, the great food products company from the great state of Minnesota, and not to echo sort of Grayson's thoughts. Short term, you have a base on top of a base on top of a base, and now long term basis also you see that one can make the case of really a 6-year cup and handle pattern that literally has just been broken out of from the latter part of 2021. So that's very interesting to me. And specifically, if it's tough to zero in on this chart, but really the last few months of consolidating up towards those recent highs, in my view, is very appealing to buy into some of these after a big run up, because we've tested that level up near 73 to 75 a few different occasions, and now we're, in my view, that largely steers this towards having a good likelihood of breaking out in the near future. Staples continues to be a great sector right now during a very defensive time for the market. So I like buying General Mills and staying long this for a move up towards the high 70s.
Excellent, excellent. Great recap. And let's recap what our three panelists have chosen. Erin, you went first, and you went with AbbVie. Then you went with the Invesco DB Oil Fund. So we were in the energy space. Staying in the energy space, you chose Occidental Petroleum, symbol OXY. Fourth pick, very interesting, PRGO, Perrigo, in the healthcare space, playing on the possible baby food shortage, the formula shortage. And then lastly, WEAT, the ETF, WEAT, the Teucrium WEAT ETF. Grayson, similar patterns here. You started out with the DBC, the Invesco Commodity Index ETF, followed by energy, Phillips 66, symbol PSX. You went to the material space, Olin Corp, OLN. AIT was your fourth choice, Applied Industrial Technologies. And then your last choice, also loved by Mark Newton and cereal lovers everywhere, the consumer staple General Mills, symbol GIS. And then Mark, on a long-term basis, you showed us not Mark, but Merck, symbol MRK. Then you went to David Keller's favorite space in the world, the utility index, with Xcel Energy. Followed that up by wheat, the commodity itself, wheat, breaking out of a major cup bottom there from '08 to current levels. Then you went a little different. You went with a stock that hasn't been trending well with TLT, the iShares 20-year Treasury ETF, which is at a major support level. So it's going to be interesting to watch your fourth pick, TLT. And then lastly, General Mills, the stock of the day, GIS, was Mark's fifth pick. And now that we've reviewed your picks, I'd like to open the discussion up a little bit because there were some things we didn't focus on. Once again, no one focused on any FANG stocks. No one focused on Apple, which broke down below that 150 level. Is it a fake out or is it a technical breakdown? No discretionary, no communications, no financials. So what I want to throw to the panel is, what will you look for in some of these beaten down sectors before you want to dip the toe in the water? So Erin, I'm going to start with you, ladies first. What are some of the things you're looking for to see a reversal in some of these sectors?
Well, with technology and discretionary in particular, and communication services, all those really aggressive, growthy areas, I'm going to be looking for the market as a whole to finally come out of this. I wouldn't want to be in those spaces. It's kind of a volatile area of the market to be. And so I'm going to be watching for when this bear market is ready to turn before I would be entering those particular areas. Financials, really crazy. I'm surprised that they're not doing as well. Again, I'll just be watching the charts as always, but I'm going to be looking for that outperformance. I need to see some of the crossovers that I have, my negative crossovers, my trend models. I need to see those go to buy signals. Right now, they're all in neutrals or sells because of where the EMAs are located. So those are the things I'm going to be looking for. And I have a few things I'm going to be watching for as far as the end of this bear market phase.
Yeah, and that's the one thing I think technicians sometimes get a bad rap because we're looking for evidence to know that the all clear is there. and the risk reward setups are in our favor. And one of the critiques we always hear, well, why aren't you buying this? It's down 50%, it's down 60%. Well, I like to see, some signs of life. Grayson, what do you look for?
Yeah, I like trading ranges. As you can probably see here, I'm
Yeah.
talking a lot about support and resistance levels and breakouts above and things like that. So I like trading ranges. And when it comes to some of those kind of beaten down spaces like tech, I mean, I'm going to look for support and resistance levels on those charts, ranges that I can draw, and then maybe within those, I'm going to look for downtrend breaks. If we can see some of those start to bounce and start to move higher within some of those ranges. If we see some downtrend breaks, even sort of towards the bottom of some of those consolidation periods, I might be interested in nibbling. But I mean, realistically, until things start going higher, I'm not really interested in it. There are always charts out there that are moving higher, so those are what are going to draw my attention. So until it sounds simple, but until tech starts moving higher or some of those other spaces, I'm going to steer towards food products and chemical stocks and things that are working.
Yeah, and I couldn't agree more. And Mark, though, you did go with the beaten down bond sector ETF, which is at a critical level. Are there any other beaten down sectors that have caught your eye recently?
Wow. Well, certainly there are quite a few. There are very few that I would consider putting money into until, as Grayson said, they really start to show much more evidence of stabilization and strengthening. I mean, that's the key name of the game. It's human nature, obviously, to buy low, sell high. But many of us, as traditional technicians, have learned it's almost always better to buy high, sell higher, and/or short low, cover lower. It just takes time for these sectors to try to stabilize. You want to see that relative strength versus the market really start to improve. Sectors like technology, we all might think that these are wonderful companies that have shaped our lives in wonderful ways, but many of them are breaking down substantially in relative terms versus the broader market. And so we just want to see, if you're a bottom picker, then that's wonderful. I think you have to be a little bit more tactical to do that. To answer your initial question, I think that biotech for me is getting close to levels that make sense. I wrote an article last night about how China tech could start to potentially outperform U.S. tech. So I think that's also an area of interest to me. And I think the cannabis sector, has completely gone up in smoke. And so I think, eventually I'm going to see some signs of strength that will lead me back into some of these pot stocks. And so those are three areas that I would point out to investors that you might want to choose from a counter trend perspective. But you really have to have a long time frame and not be too quick at trying to put all your eggs in the basket right at the very lows.
Yes, pot stocks up in smoke. Well said, Mark. I'm not going to let that go without making a wise comment on that. Another thing we hear a lot about, this is the May version of the pitch, is sell in May and go away. Well, the indexes, the NASDAQ, the Russell are in bear market territory, down over 20%. The S&P 500 is down over 15%, and the Dow not too far behind. What kind of credence do you give to these seasonal factors now that we are in the weakest 6-month period going to the fall and the presidential cycle? Do any of these fall into how you're looking at things? Erin, I'll start with you.
I think that they're, academically interesting. Seasonality, I mean, StockCharts does some great seasonality charts. So I'll look at them now and then. But ultimately, I mean, seasonality is just, it's really, I'm not really a fan, if you will, of following those kind of, sell in May, that kind of thing. At this point, I see more selling. I'm not ready to look for a bottom right now. So, I'm more interested in sentiment versus seasonality right now. I mean, sentiment is really very, very bearish. I wrote an article on it for Chart Watchers a while back and in the Decision Point blog that, basically we're at these amazing bear market sentiment right now, this really
Historic levels.
bearish. Right. But it's still not what it was at the end of the 2020 bear market. We still have, honestly, there's still a lot of people out there that are excited about buying, wanting to buy this. Oh, we're going to have this reversal here coming up in tech. And so they're jumping in. But as we were talking about, I mean, until you start to see that reversal. When we're in a bear market, when the total market is doing so terribly, looking for reversals right now is super dangerous.
I concur. I concur. What about you, Grayson? How does seasonality factor into your decision-making process?
I'm really glad you brought this up, Jay, because this year was actually a really interesting example of sort of why seasonality matters and also doesn't matter. Going into April, one of the things that I was actually excited about, I think I tweeted out a chart of this or something. If you look at the total market, I mean, let's just take VTI, for example, the total market index. You look at the total market over the last 5 years heading into this April, so up until 2021, basically. VTI had been up in April every single April for an average gain of about 4.7%, if I'm remembering correctly. So April was an incredibly strong month, historically, seasonally, for the total market. We saw that break this year. It didn't happen. So it was a great example of how seasonality can be helpful. That was something that I had on my radar going into April. And it was also a great example of why seasonality doesn't matter, because when that didn't come true, you had to put it behind you. You had to sort of move on and say, okay, just because it's happened in the past doesn't mean it's going to happen again now. So I've always thought that seasonality is a great reason to look. It's a great reason to have something on your radar, but it's not a reason to jump. It's not price action. It's not, something that you actually act on. It's something that you keep sort of in the context of everything else that you're seeing. So this year really has been actually a great example of that. Last month specifically was a great example of that. We'll see how that plays out over the next couple of months here as we go into, like you said, one of the weakest periods of the year.
Yeah, without a doubt. I know the guys on the floor were hopeful that April could turn things around because historically it's the best performing month. But, nothing has been normal about 2022. What about you, Mark? How does seasonality play into how you look at the markets?
Yeah, I put a lot of importance on seasonality, Jay. I mean, it's obviously much different than how I approach looking at individual stocks and picking. But in general, heading into a midterm election year, they do tend to be the weakest of the four. When you couple that with a down January, and we're actually in what's called a Shemitah cycle, which is every 7 years. So when you look at history and how those line up with the midterm election years, they can be particularly ugly. And so I think, to answer Grayson's initial question and your question about, April being bad, we have to put these smaller cycles into the very longer term cycles to really pinpoint where we are in the bigger scheme of things. And so this year, for me, lines up very similar to the 60-year cycle, or the 60 years from here being, 1962, where you have a very, very weak first half of the year and then you rebound. And so there's a lot of things to consider on how you look at those cycles and whether they're important or not. But, I find them to be, very important. And W.D. Gann was the pioneer of looking at just the annual cycle and, finding spring peaks and then, of course, lows in the third quarter and a very sharp year-end rally. And, if I had to pick one thing, and they've done countless studies on this about the sell in May and go away, but watching when the MACD breaks in May and exiting the market until October when it turns up, that does far superior than a long-term buy and hold where you never touch your money. And so there is something to be said for using seasonal weakness and or strength to consider your timing.
All right. And what was that first chart? The Schmiedel cycle? What was that? That was new to me.
SHMITA, Shemitah cycle. It's an agricultural cycle. Yeah. And so there was an article by the Foundation of the Study for Cycles, which I'm a member that I'm happy to forward to you. And I forget the gentleman's name that wrote it, but it was a phenomenal study and had lots of back testing and had some pretty interesting insights.
All right. I don't remember that on the CMT exam. That was a new one for me. So, yeah, send it along. I've been having trouble sleeping at night. Maybe that will help. No, I'm joking, obviously. I'm very interested in learning more. And then the last thing I wanted to just ask the panel, just a general market overview. I have here the S&P 500 chart. We're going back now to pre-COVID, about 3 years. And as you can see on this chart, there's been some damage done. But over the long term, this is an ugly correction. We are at an interesting level. We broke the 4,200 mark in the S&P 500. We retested some critical levels. If you looked at anchor VWAP levels, Fibonacci retracement levels, and
Mhm.
we got to down 19.8%, which seems to be the popular move in the S&P 500. It happened in 2018 as well. Before we got a rally, do you believe that this is just another relief rally, or we may be onto something? I know it's a loaded question, but Erin, I'm going to throw it to you first, unless you want to punt to Grayson, and that would be fine with me too. But what are
Uh,
your thoughts on the current market environment here?
well, I will tell you that Carl, in particular, has always been considered a perma bear.
Mm-hmm.
And then other people have said I'm a perma bull. So I guess we even ourselves out. But both of us don't believe this is the end. And I think we will see a lot of these quote unquote, bear market rallies along the way down, like we are, because, bargain basement, a lot of people jump in. I know today that's kind of what's going on. But ultimately, I think we've got more to do. We've got a lot of overbought stocks. Even now, they still are. And, we've hit this level, yes, and we did manage to bounce, but I don't see it as being the strongest support level on this chart. I see the 2020 high. I see the, later 2020 high at 3,500 there. I mean, that's to me where I would start looking for a possible bottom. But even so, I need to get some positive divergences on my indicators. I'm just not seeing it. I have indicators that really aren't that oversold right now. So it's telling me that this isn't quite done. And I do have a few indicators that I use. And as soon as I get some positive divergences there, then talk to me. Then I might be getting a little bit more bullish. But I buckle up, Buttercup. I mean, I think we still have lower to go.
I know, and that has been the frustrating thing about this market. And people don't like when technicians or just floor traders, say, let's just get it to where it has to go, because we want to see those oversold, indicators. We want to see that RSI really, kind of puke it out like it did during the COVID lows, which was a whole different sell-off, and hopefully something we never go through again. But the bottom is a process, and it hopefully we're starting that process. Grayson, what are your thoughts?
Yeah, it's a tough question to answer. There's so many different things that come to mind. I think one on the kind of shorter term optimistic side, about a year ago on the S&P 500, we tested the 4,000 level, basically the 4,000 level, and we bounced from there. We actually tested it twice, relatively close together in May of last year. So, are we seeing kind of a false breakdown below that? We've basically just gotten above that with today's bump. So, that's one thing that gives me a little bit of hope that maybe we do find a little bit of support and we bounce higher here, off the 4,000 level. But I got to say, I mean, I was looking at some longer term charts over the weekend, and one of the things that does scare me is that I've got 2007 to 2009 in the back of my brain. Hate to even bring that up because it's instills so much fear in so many people, but if you do zoom out, what you see is that in 08, we put in about a 25% pullback, 21% pullback here on the markets. We bounced, we chopped around a little bit, and then from there we fell off a cliff again and ended up being a 56% drawdown. So are we seeing the same thing? I mean, we're sitting at a similar level right now where we're about a 20% off the highs kind of level. If we do bounce and chop around a little bit and then fall off a cliff again, that's kind of something that's in the back of my brain. But again, I'm looking for levels. I'm looking for ranges. I'm looking for lines that I can draw across these charts. Right now, the one that I can draw is 4,000. We've just gotten above that. That's a good sign. And I'm going to just sort of keep watching and see where we go from here. If we hold it, great. If we don't, yeah, you look out below. Yeah, 2020 highs, might be something in play. So.
Yeah, and I like how you put it in even a bigger perspective. What I'm trying to find now is, a lot of people compare what's going on right now to the dot-com. That's what I hear the
Yeah.
most. And in 99, 2000, we had that run up and we sold off and we paused a little bit and then we took another leg lower. So punch up that chart going back if it will. But before I get that chart up, Mark, what are your thoughts here as far as the S&P and trying to put in that low and some levels that you're watching?
Yeah, I think it's premature to make too much of the bounce thus far, Jay. I think S&P gets held at 4,100 to 4,160 and then turns back lower down towards 3,800. Um, I put this out in my webinar outlook in January that I expected markets to pull back to 38.15, which is the first 38.2% fib level of the entire move up from 2020. If we get below that, I think there would be a good likelihood of getting down to 3,500. To Erin's comment, that's a 50% retracement. It also lines up with the February 2020 highs. But I do believe we're in the eighth inning of this sell-off. I do have a lot of appreciation for how bearish sentiment has gotten. I don't think we've seen capitulation yet. That's something that's lacking. I'd love to see, a real overbalance of selling on the downside and seeing, really equity put to call ratios jump up above one. As a former CBOE options
Right.
trader,
Yeah.
we just don't see that. So Elliott wave to me suggests that this is a three-wave decline, and then we could actually start to rally back in the second half of the year. We'll see if that materializes. But for now, we have bearish factors such as, first of all, ongoing downtrend is still very much intact. We don't see the leadership out of technology, breadth, cycles. Most of those are still very negative. So I look, buying dips works great in uptrends. The market certainly is not in an uptrend right now. From the last few months, if anything, is a guide that right now we've been trending lower, and so it's human nature to want to buy low, sell high, but we just need to see more proof, and I just don't think we're there. I'd love to see evidence of technology showing greater strength. For now, it's right to be defensive, and I think my thoughts align with everybody else's.
Yeah, and I think that's what's great about this show. I mean, we are on the pitch, and while we're trying not to end on a down note, we came up with ideas and we look for pockets of strength. And you're dodging some of the bullets when we talk about energy and we talk about some healthcare names. We're talking about commodities, wheat being one of the things we focused on. So while we are talking about the overall market, there are pockets of strength and there are places where investors can go. And sideways is a direction as well. And sometimes if we go sideways, that's not a bad thing. But in the interest of time, it is towards that point where we have to say goodbye. But I wanted to thank our three amazing experts on this panel: Erin Swenlin, Grayson Roze, and Mark Newton, CMT. You dropped a lot of great knowledge, great information on us. So please comment below in the comments. If you didn't like what you see, my name is Grayson Roze. But if you did like what you watched, please hit that like button, share us on all social media platforms, and please subscribe to the StockCharts TV channel. It's been an honor to try to fill David Keller's shoes, Grayson, your shoes, Erin, your shoes, and maybe Mark, one day I can be on the other side. Now that I've hosted, it's a different ball game. I got through some technology hurdles. I want to thank the team back in Washington. Sky, great job on your end. But for Jay Woods, Chief Market Strategist, DriveWealth, thank you for joining the pitch, and we look forward to seeing you next month.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.